Hey everyone, welcome to the KE Report, a daily editorial on Friday, May 30th, chatting with Brian Leni, founder and editor of the Junior Stock Review. Now, Brian, kind of continuing on a theme that we've been talking about this week and even over the last couple weeks is the very strong environment, the bull market that we are seeing for gold stocks and now even filtering down into some of the smaller gold stocks. We're seeing good news get rewarded. We're seeing a lot of money being raised, even in some of the smaller cap companies. And we continue to see very strong operational results out of the larger companies. So, Brian, what's your takeaway from it seems like this rotation we're seeing money starting to trickle down into the juniors and quite frankly, bullish action on the back of solid or just generally good news releases?
Yeah, well, first, thanks for having me, guys. Yeah, it truly is a different market, even looking back a year ago to where we are today. The fact that good news is being bought, that, the market is anticipating good results. I think it just shows that people see a rosier future. And that's been exceptionally good for those of us that have been in this for a while and have had our portfolios suffer the previous years. But it really, I think, highlights the prospects of what might be ahead. That gap between the gold price and sort of where the comparison I like to make myself is the comparison to GDX and GDXJ, which I don't think are the greatest indexes to reflect the sector, but they do. And there's still that huge gap between where the gold price is and where, if you compare the 2011 high in the gold price at $1,900 gold, and there's this huge differential. And with gold at $3,300, the differential is suggested to be even higher. So that gap's even to close. And depending on how you had placed yourself over the last year or so, there's already been quite a bit of money already made. But considering what's ahead, that companies are being funded, good news is being bought, the market's anticipating, I think things look so good and gets us more prepared for what I think is going to be more of that ripping bull market, what we saw in 2016, 2020, that thing that, not maybe not quite rises all boats, but that's much more frothier than we've seen over the last year.
Well, Brian, just to that point, when we're getting into this part of the cycle where we're starting to see an acceleration of upside targets for companies, news is getting traction, people are coming in on the bid, you're seeing volumes pick up in some of these stocks. How do you handle it as a portfolio manager? Because I think one of your strengths is that, rather than being in the GDX or GDXJ, you've built your own portfolio and you often can have quite a bit different experience than if you just track the GDX or GDXJ in a portfolio of stocks that you hand curate. So, how are you dealing with companies that have jumped up a lot? Are you trimming them back? Are you moving down the food chain? What are you doing as far as portfolio management in this environment?
Yeah, it's interesting. I think we are on that precipice where I'm more prone to let things run, but it completely on a story by story basis that I think you have to play it. Like you definitely, I think, want to move with the momentum of the market. And if it's more positive, I think there is more reason to believe that the share prices are probably a little bit more stable where they are and do have the potential if things are successful that they're going to move up. So if you like the way a company is progressing, if you look back a year, maybe 2 years ago, and it was that mentality where, good news was sold or at least profits were taken to a certain extent. And, like I said, I'm basically expressing that what we're seeing is, we're holding because we see things progressing in the right direction, and there's more probability that I think that it's going to stabilize there. So that's generally what I would say is I'm taking the sort of same approach. For me, if you look how the portfolio is constructed, that also has a lot different, emphasis on how I'm going to manage it. Basically, about half in exploration, about half in development. And when you're sort of in that kind of differential, the development companies, while the ones that are in our portfolio definitely have exploration upside, it's definitely a longer term view that I'm looking at those ones. So am I more prone to hold those positions and wait till all those catalysts are sort of met before I sell some? Yeah, probably. On the exploration side, again, that's where it becomes even more a company by company basis and what I'm seeing from the results, if I like it, and what I think the prospects of them expanding or garnering more recognition from the market. So I don't know if I truly answered your question, but that's sort of how I'm approaching it. And I have been sort of cycling profits around, and just recently, about 3 weeks to a month ago, put money into a brand new story. And that just so happened to has worked out really well in the short term, which is not always the case. But that's what I indeed did, is took some profits away from some other companies and filtered them into this new, probably advanced explorer is the best way to categorize them.
So, Brian, I know a lot of the stocks you pay attention to are kind of those development plays, and not the pre-discovery, not even really early discovery. I find it's more of the ones that you can build some models around, that they have an asset, and then it's about valuing that asset. Where are you seeing some of the disconnects right now in terms of these more advanced, either exploration plays, or if you want to call them development, early stage development plays?
I still think that there's a huge gap with like some of the top end project generation companies. And, I'll use the example. They're widely known. I've talked about them on here before. If you look at Conorland, their share price over the last 6 months is up, 40-ish%, which seems like a lot. And I suppose it is. But you look at how Kenorland's constructed, how they're developing their portfolio. They added two more projects they announced this week. The deals that they already have set up, like I think you have results coming from four different programs, one including that, the South Uji project, which is, rightly highly touted as huge potential. I think a company like that, given what they have and then the underlying value rooted in Renault, considering that it's a 4.5% NSR on that discovery, and what it could mean in the future to cash flow if that becomes something. I still see a huge disconnect there. And I think that, maybe the market wants to see more from Sumitomo, like what that initial resource is going to be until they give them more credit. But for me, one of the things that I've been trying or been doing is all these new companies that I'm looking at, those biggest positions, probably about five or six positions represent 60, almost 70% of my portfolio and the newsletter portfolio is comparing those new deals to what I already have. And a lot of the times I look at, what's new out there and what I could put money in, and I compare it back to a company like Kenorland. It's like, man, you know what? I love the management team. I love the business model. I think they're undervalued. I've had a really hard time, placing money in other places besides just buying more KLD or, one of those top five or six positions in the portfolio. So that's has been my perspective on those sorts of companies and where the value is. And again, like I've been lucky that I've been able to pick those companies and them for them to have performed. But I still see that differential in that company, like you were saying, that's sort of in my wheelhouse where they've made a discovery or they've outlined something where that I can put a value on, and the market hasn't given them recognition for yet.
Yeah, Brian, it's so tricky when you see shiny new objects and you're introduced to new companies and they seem compelling. Everything right now at these prices seems interesting, but then to compare it against what you already have, it's, which one do you love better kind of thing. And often the due diligence you've already done previously has you positioned in the right companies already. But how do you know when it's time to maybe take on a new commodity? I know that you also invest in copper, you've invested in silver in addition to gold, but do you ever get wooed into looking at other critical minerals? Do you ever decide to take a flyer on a commodity you don't have exposure to? Is there ever a time in your portfolio where you want to diversify into other things that are running besides just gold?
Absolutely. And that's part of the thing. Like trying to find value forces you to go into these sort of contrarian bets, whether it's platinum, palladium, whether it's nickel. Some of the critical lithium is certainly, I would say, hated for the most part. What I would say is this is, again, I'm comparing those opportunities to what I already have in the portfolio and no. And so that's a hard hurdle to climb as it is. But I am looking for value. When you look at, like, I've segmented to look at the higher end stuff and those sort of hated commodities. And I still don't see the kind of value that I think I need to have that money sit there. I think that and I don't want to get too much into names and stuff, but if you look at sort of that best of best and some of those hated commodities, I wouldn't say they're that cheap yet. Like they're cheap enough, and in a regular market, like if I thought that metal price was moving and the catalyst sort of supported it, I probably would put some money into it. But right now, I'm just not that hyper confident that these companies are cheap enough at the top end for me to justify the money to sit there. Whereas you look at gold, I would say copper is like, and I've unfortunately said this for more than a year, that copper's on like that precipice of turning, and it hasn't. But I see more reason to be in gold and copper right now than I do with money, waiting to be recognized, by the market as being undervalued and such. So that's kind of how I've approached it. And if I find something that's cheap, I have no problem with putting the money in and having it sit there. But I want a good discount to the underlying value. And from my perspective right now, I just haven't found it in those other commodities yet.
Fair enough. Hey, ride that wave, right? We've been waiting for this sort of a bull market in precious metals for a while. The recent bull markets that we've seen were so quick, some only 6 months long, less than a year long. I think you can make the argument that this is at least longer than a year, considering gold broke out back in March of 2024. But look, gold's been going up now for 10 years. It did have a few year pauses within that time frame. But Brian, how do you put a time frame on it? How do you even navigate the timing aspect of just understanding that you got to ride this wave higher, but you also need to be willing to lock in some gains at some point because this thing doesn't always last forever.
Absolutely. I think this is how I look at the precious metals or gold space right now. To me, the reasons why the gold price has been so strong are linked to central bank buying and this general consensus of not only countries or central banks around the world wanting to protect themselves against, financial sanctions, against, a US dollar whose monetary policy is, has been ever getting worse. I think for all those reasons why the gold price is going up are reasons that aren't going to fade anytime soon. And when you add the chaotic situations of, whether it's war in the Middle East or whatever is going on with Russia and the Ukraine, all the uncertainty with the not only the US economy, but the economies around the world, I think it just speaks that the gold price is going to probably stay in this kind of realm or go higher. And I think for that reason, I think eventually that wave that I was talking about earlier is going to happen. And even if it doesn't happen, the ability to pick good companies, sort of that cream amongst, the rest of the companies out there are going to do well and their share prices are going to rise and maybe even like really rise if we get into that bull market. So for me, there's every reason to believe that the gold price is or the gold market's going to be strong. And that's why I talk about, wanting to capture that momentum and stay there right now, even though like the portfolio has performed exceptionally well. Last year, the portfolio made over 150% average weighted gain. And this year it's up around 100% already, and we're about halfway through. And I would say that the bulk of the catalysts for the portfolio are going to be happening in the next 2 to 3 months. So, it's performed exceptionally well. I just think that's where the most likely probability for, getting more profit in the 6 to 12 month range are. And I keep on looking for those deep value plays. But for just whatever reason, I can't seem to find them in the platinum, palladium, nickel, those sorts of areas.
Well, Brian, one of the exit strategies a lot of investors use is if there's a takeover of their development stage project. And so some of these projects, once they get to PEA, PFS, FS stage, they start getting on the radars of larger companies. You start seeing strategic stakeholders come in. I know that you follow a lot of advanced explorers and early stage developers and late stage developers. How do you ascertain which ones could be the next takeover candidates? And are you surprised that we're not even seeing more M&A deals? I know we've had a good stream, but at these prices and the divergence between where producers are at and where developers are at, are you surprised we're not even seeing more deals?
Okay, so first with the M&A is absolutely a fantastic way to try to find an exit for a position, especially if it's a bigger position in your portfolio. The bigger your position in it, let's say you get over those 100K, 200K, 300K marks, usually you're looking for one of those big sorts of exit things that happen or that can get you the profits without trying to, blow all the shares out into the market. Let's use the example of Thesis Gold. We've talked about Thesis Gold before, and the first thing that attracted to me was obviously the value. When I saw the market cap in relation to the resource, I thought to myself, "Wow, like there's a big discrepancy here." And this is going back to early last year, so the market really hadn't changed, and the outside of an M&A deal or something like that, why was this share price going to move? And for me, it was like, not only is there a discrepancy between the price and value, but also when you get to the size and the location of Lawyer's Ranch, To me, it just spoke to this being exactly what a what a strategic investor or a senior mining company is going to want. 5 million-ish ounces that are open pittable. It's a higher grade at around a gram and a half, and located in the Toodoggone. It's road accessible. These are things that you just don't find everywhere. Yet there's this huge delta in price to value. So my thought was, with the exploration upside in Ranch, love the management team with you and Webster. To me, it was worth taking that chance last year where, developers weren't necessarily garnering a lot of attention. But I thought all those things sort of line up that this is what a senior mining company would want. And it's just a matter of time before this gets consummated, especially moving towards a PFS. So checks off all those boxes. And then sure enough, we see just over a month ago, Centerra finally takes that 9.9% position, and given the proximity to Comes, it just makes so much sense. And so what I'm trying to get at is, I think if you start first with the quality of the project, if you can find like a high quality project that's located something like Laura's Ranch that's road accessible, sort of like the no brainer, especially in that down market, that was the way you could potentially position yourself to make a lot of money. And that's what's happened with Thesis Gold. But again, if you look at that price chart, there was plenty of ups and downs. And I think a lot of people that weren't convinced of the quality of it could have got shaken out. And we decided to buy that in the portfolio in tranches. And we started the position off at 69 cents and then put a final two tranches in at 55 and 58. And it worked out exceptionally well. But where I had to be confident that this was eventually going to happen, and sure enough, it was. And those are the sorts of bets that I want to take. But to me, it was fairly obvious last year that this is the direction they were going to head. I just couldn't see a scenario where a senior mining company, mid tier or bigger, didn't take at least a 9.9% position. And I don't know if that's just experience or what it is, but that's what I saw in that project, and it ended up being right.
Yeah, it also helps with other news in the area also being positive, right? Other companies entering that area, because that's kind of what that Toodoggone area needed, was a few more majors to take an interest there. The resources seem to be there, just need some more development in that part of BC. Brian, we got to wrap it up here. Again, Brian Leni, founder and editor of the Junior Stock Review. Click that link in the show notes to follow along with what Brian is covering and sign up for his newsletter if you want to find out what he is buying. And this is the time in the market to sign up for these newsletters, because, man, there's still a lot of opportunities out there, especially if this bull market continues. Brian, as always, thanks for your time today. Great chatting with you.
Thanks for having me, guys.